You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
Welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call around here, ye old Options Insider Radio Network. Old because we've been doing it for a while, about 8.5 years now. We literally created the Options podcast, but we didn't stop there. No, not by a long shot. We decided, what fun is having one when you could have 13? And so that is indeed what we have now, a full network for your listening pleasure. If you're a basic options, just coming to the options market for the first time, if you're a skilled vol trader, if you're an asset manager, financial advisor, futures options guy, somewhere in between, chances are we've got a show for you. And if not, let us know what you're looking for on the network. We're always open to number 14 and number 15, and probably those will be coming soon anyway. So lots of good stuff on the network. Where can you find all that options goodness? Well, of course, the mothership, the flagship, the optionsinsider.com. Surf on over there for all the latest breaking news from the options market, as well as great educational articles, analytical articles, unusual activity articles, all sorts of fun stuff from the world of options. You could spend many great hours just surfing around on the old options side. I know a lot of you guys do. I see the numbers. So you guys click around quite a bit, and we love it. And of course, while you're there, you can also, of course, click on the Insider Radio Network tab and then download or stream to your heart's content pretty much any show on that network. That's thousands of hours of content at this point. So you're pretty much, if you need some options content, we've got you covered. And of course, you can also find it iTunes, TuneIn, Stitcher, pretty much wherever you find your favorite podcast programs, including our own mobile app available for iOS, Android, and the Fire OS. A bunch of people from the live show this week were telling us how they were using the mobile app and they were enjoying it, and so it's good to hear. And great to see everybody out there. Glad people who can come out. Andrew, I always like connecting with the Option Pit clientele. It's kind of fun to see what these people are up to, what they're interested in, what they're trading, what they're learning, all sorts of good stuff. And it was also fun to see you in person. Of course, we are joined by the Rock Lobster himself, now back safely ensconced in the hinterlands of Maine. No more of this big city stuff. Crocodile Dundee is back where he belongs, in the hinterlands. Do you feel better, sir? Has the stink of the big city wore off you yet?
It does take me like 3 days to recover from my Chicago trips.
It's like all that humanity in one place. It must just be overwhelming to your senses.
I think I see there's more humanity just that I walk from the train station to the office than there is in all of the state of Maine.
Yes, that's pretty much true. Unless you hit the LL Bean store. That's a hive of activity. But aside from that.
Well, LL Bean right now, like if you walk in there at, somewhere between 11 and 4, it's a mob. That whole Freeport, it's like they're giving stuff away there.
Yes. LL Bean just giving stuff away, hand over fist over there. Well, it's fun to do a show in the same room with you. We got a lot of great feedback on the live show. We kind of threw it together last minute, but it was fun. I figure when the Rock Lobster's in town and all your students are in town, it's a good time to kind of do some fun shows and to kind of check in and see what where your students are up to. And you guys even created a market maker. I didn't think it was possible in this day and age, but you guys went back and Frankenstein's monster created a market maker who's now standing on the floor streaming quotes in 2015. I did not think that was possible anymore. So my hat is off to you, sir. You have done the impossible.
I was about to say, how many option trading services can actually really create a professional trader? I will tell you, I know of at least one.
Yes, you know of at least one. And that's you guys doing your service back to the market maker community, the community that spawned most of us here on the program. You have now done your duty and gone back and given back to the community by creating a new one of our brethren there. So hats off to you. That is indeed crazy town. Streaming quotes on the old P Coast. Burritos in one hand, streaming quotes in the other. Good stuff out there on the P Coast. Crazy town. We'll get to all of that in a bit, but of course we are also joined on the old program by he of the orthodontic riches, none other than Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
Oh, it's always a happy day today when I find out my son does not need braces. It was quite the rush today. It was, I'm very unemotional with trading, investing, business, things like that. But by gosh, my kid doesn't need braces. Man, I'm rich. Woo!
You are a rich man, both in resources and indeed time of all those orthodontic appointments. I'm sure there's many, many, many things in there. We missed you at the live show, sir, but we know you were there in spirit.
We had
an extra steak just for you, just on your behalf.
Thank you.
Just one I took one home for you on Mark, so that made it even tastier. I'm enjoying it as a side dish on this show as we speak. Speaking of the show, it's time to get rolling. So without further ado, let's dive right into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down what's moving, what's shaking, what's catching our eye in today's activity. Today, we are recording this, of course, on Monday, August 3rd. Still recovering from the bacchanal that was the live show last Thursday. If you guys missed it, you weren't in town in Chicago, you missed a fun time, but I know everyone can catch it on the feed now, so catch it up after the fact and enjoy all the fun nonsense that goes on at those live shows. Today was a bit of, at least comparatively, a somewhat quiet day overall in the marketplace, at least from an end-of-day close perspective. Most of the major indices closed off a little bit shy of off 0.5% on the day. The S&P and the NASDAQ closing off about 0.4 of a percentage point to the downside. That's a little over 8 handles in the S&P there. The Dow leading the charge to the downside off about 0.6 of a percentage point, or a little bit over 100 handles on the day. And of course, with all this downside love and coming off a weekend of some interest, of course, VIX cash getting a little bit of air back in the old balloon, ticking back up a little bit over half a handle to 12.72 on the day, or for those of you percent of percenters, an even 5% on the day. Mr. Rock Lobster, in addition to brushing off all that city living, what else caught your eye in today's activity, sir?
Getting the city off me. It took me a couple days to recover from that awesomely humongous Smith & Wollensky's steak, by the way.
That was a pretty good steak.
Eat till Saturday night.
And then you had room for lobster again.
Yeah, Sebastian took the balance of it and threw it in the sauce that I made last week. So it was he won like all kinds of ways, except he had to pay for the whole thing.
You make sauce when you travel? Wow, I'll have to bring you over.
Oh yeah. Mark and I always cook. It's like one of the favorite things we have. Clients that are in town or whatever come over, so we feed them. I figure if you're going to pay us a bunch of money, you come into town, I'll throw some meatballs at you.
Huh.
They are quite tasty.
Not a bad deal. Tasty meatballs. I like it.
You're welcome to come over. You'd like it. Believe me, there's plenty of food. We could even feed Tosaw, I think.
That's saying something, sir.
I'll take you up on that.
But the VIX, this is all my clients are complaining today. They actually called it much better than it is. I was looking for long vol for free, which I could not find. They were just disappointed in how crappy the move in volatility was. All of our pro clients faded it. They did awesome. They're like, this is crap, and they all had a nice day. As far as just the vol move, I think you get a move. You're over like you're 0.75%, and you can't get more than the weekend out of the VIX for a lift. And they all called it, and they faded it pretty good. So, it is a weekend. We were down some, Apple falling out of bed, and the VIX managed to close, it looks like 12.5, 1257. So there is not a lot of fear there. I keep thinking, is this like a 97 or a 98 where you've had these years of, pretty solid bull markets, and then some goofball thing out of left field is going to come and wreck the party. I think the biggest, I don't even know if it's a worry, but the continual decline in oil and commodity prices. Usually, to me, when something moves in one direction, it is when things move in one direction, it is the market has a hard time with that, and I think the only what we had is continued drop in commodity prices starting to spook people a little bit. Worried about deflation. Treasuries are starting to rally again. Yields are going down again. I think we're not at year highs for Treasury prices, but doggone it, we're getting up there. So I don't get why it's doing what it's doing, but somebody's out there buying Treasuries and selling the bejesus out of every oil stock or anything related to oil there is. So we're not even close to the 1 year highs this year when we had some of those other crises, but still, it's certainly not at the bottom of the pricing for the year. We're trading around 115. So I don't know how long this spike in bond prices are going to last, but I think there's that slight deflation fear that's just hanging over with like all these major commodities just kind of continually sort of hitting lows, and they're not stopping. And that's the problem.
Thank you for that, Mr. Rock Lobster. And turning our tables now away from orthodontic work and towards what caught his eye in today's activity. Uncle Mike, a lot cooking in some of your products, including your favorite sparkly metal, has had an interesting couple of weeks as well. Haven't had a chance to catch up with you about that of late. So what caught your eye in today's activity, and what's your take so far on this roller coaster that is the precious metal known as gold?
Couple things, actually. Let's start with the precious metal known as gold. We're still above the 100 level on GLD. And with that in mind, I think that's going to be a pretty big psychological barrier to get through. With that being said, GLD is down probably around maybe 9% on the year, give or take a percent or two. So with all that being said, we have been relatively steady, and it's been a roller coaster, but it's been steady from the standpoint that it has not gone down 30 or 40% or nothing along those lines. With GLD doing what it's doing, I have not rolled down our put as of yet. So we're still holding tight at the 109 put at GLD, and I don't intend on rolling it down. I'm going to continue to keep it around that level as long as we can. And I think it's a time to be pretty cautious on it, but I think we are going to be at a stage pretty soon to where it might not be a bad idea to have a little bit of gold in your pocket just because of the fact that it's fairly low, relatively speaking, to where it's been. The other thing that's catching my eye is, to add to what Andrew said, is the treasuries. You look at TLT opened or closed 2014 at 125.92, and today it closed at 123.55. So TLT is making a little bit of a run, and I think the next level with which TLT is going to have to really prove itself or really get through is to become positive on the year again. So that's another thing. Of course, oil stocks are continuing to go down. There is a sell-off in commodities with which we need to be very aware of. And then last but not least, the market itself, that is coming down. We're actually we're long stock, long put in our SPY fund, and we're totally flat right now in my SPY call fund. I've been waiting for us to either touch all-time highs or come down to a level justifying getting back into it, and we've been flat on this for a while now. So there's a lot going on right now, and I think that with what's happening, with everything that is going on, what is very interesting to me is that SPY, just using that as kind of the benchmark, we opened the year at 205.54. We're up about $4 on the year, so roughly 2% on the S&P, and we're in August already. Now, we could easily get a big year-end rally, who knows, or the opposite could be true, but what's intriguing to me, or what still just continues to catch my eye, is the fact that with all the headlines with which we've had, for better and for worse, between the Fed, between Greece, between the Iran deal, between China's market manipulation, between everything that's happened so far this year, we're up about 2%. So you wouldn't think it by the world actions, but we really haven't moved that much.
Yeah, you know, all that talk about gold. I've had kind of gold on the brain myself a little bit as well. We've got the new CME senior economist coming on our long and short of futures options tomorrow. He just so happened to put out an interesting report on actually July 14th. So he was pretty well timed, or I think the 15th, that called the gathering storm in gold, and essentially gold storm on the horizon. And essentially the whole report was about, wow, you know, implied vol out there in gold options is surprisingly low. Perhaps that is perhaps a sign of some storms on the horizon. And no sooner did he put out that report, of course, than we've seen gold take it on the chin. Back when we did the initial report back around July 15th, it was about 12.1% in the 30-day implied. Got up to about 19% on the 21st. It's back down to about 14.5 or so out there now, out there in the WTI options as well. He also pointed out that annualized volatility out there, realized vol out there in gold has been pretty low over the past about south of 9%, which is since 1975. It has averaged around 17%, so pretty much 2x what it's been over the past couple of months or so. So a lot of things were pointing towards gold taking some impressive moves perhaps to the downside, and sure enough, that has indeed happened. So if you guys are interested in all things gold, tune into our long and short of futures options. We're recording that tomorrow. It should be out later this week, and you guys can listen to it to yourself. Interesting note, too, so I was digging through some of the open interest numbers out there in gold, and you know, we in the big gold futures options, not so much GLD. And just, you know, we always joke about the gold bugs being, you know, super crazy out there. And even now, when the skew is pretty marked to the downside out there, especially in the near term contracts, people are buying gold puts like it's going out of style. Still, when you look at just the overall open interest out there in gold, the gold bugs blow the doors off anything. Like the lowest strike, the number 10 strike from an open interest perspective on the call side would be orders of magnitude bigger than anything on the put side. I think the biggest strike out there so far are still the 2,100 calls. I think those are Dees 2015, 2,100 calls. Nearly 70,000 contracts open on that strike. Contrast that to the biggest put strike. That would be also the Dees 2015, 1,000 puts for about 15,000 and change open on that strike. So still, when you're talking gold, still the story just in net volume is still to the upside. We'll see if that changes a little bit, but a lot of crazy stuff afoot out there in gold. Sounds like you got your 1090 strike kind of clearly carved out there, Uncle Mike. And if it gets below that, I guess you'll be looking to readjust.
No, I mean for the long and the insurance end of it, just sticking to where we are at this stage. But if we do get low enough, then what I would look to do, I would still keep the protective put on at the one. I'm sorry if I said the 109 level, I meant to say 108. My apologies on that. But we're still at the 108 level, and if anything, I would likely just buy some calls or something along those lines, especially if we have this low a vol. I'm having a hard time. I mean, right now, I'm just saying I'm just long a put, because if we try and finance it in some way with a put spread or something along those lines, it's very difficult to do. I could look to do a calendar or something along those lines, but for right now, I'm just going to be long put because it's cheap.
Usually I would mock you for that and say that's oh so boring, but yeah, it's kind of hard to argue with you at this point. There's not a heck of a lot of incentive to sell that other leg for a nickel or whatever the heck you're going to get out there right now. Yeah, it could be an argument if you are indeed a gold bull that some of that perhaps upside might be starting to look a little, of course, it's getting bid up a little bit more now, but still historically maybe somewhat cheap, interesting stuff. Andrew, you guys over there in the pitch chat has gold, either GLD or the big, I think I said WTI options before I meant the big gold options. Anything in the big gold futures options catching your eye out there?
Yep, I did. We're not we don't trade the future options. We don't look at them a lot. But we're regular gold. Yeah, regular gold IV is pretty darn cheap. It was a lot cheaper a couple of weeks ago when it was 12.5%. We looked at kind of ratio calendars where we bought 20 contracts in the back month, but only sold 10 in the front, and pick up positive theta. That ended up working out pretty well when gold fell apart. So we kind of have the remnants of that position on still. It's just like a small short delta now, and so right now it looks like a little bit of no man's land. It's not as cheap as vol was, but it's hard to think of a reason that we're going to have some sort of inflationary pressure with all of these other commodities just getting totally smoked. So, I mean, I guess it could be the bottom at some point for sure, but right now it's just it just looks like it looks a little like a little dead money feeling right now. That's what I would think, and I think we are so close to 100 that we will touch it relatively soon.
Well, you're talking about dead money was not to be found in the options market in July. No, of course, you're recording this. Like I said, July 3rd, that means it's the beginning of the month, and the numbers are out for July. And after everyone hand-wringing about, oh, what a terrible year it's been, and we'll get to that in a bit. But at least from a month-on-month perspective and a year-over-year perspective, July not looking too bad. Actually, overall volume coming out, this is of course coming out of the Options Clearing Corporation, our buddies over there at the OCC. Volume in July was 385.4 million contracts, up 7% from July of last year, which was 360.5 million contracts. This is the highest volume July on record. Again, saying the highest volume July is kind of like saying you're the tallest little guy at the midget tossing festival, because July not historically a strong volume month from a market perspective, but still not a bad thing to see. Certainly in a year when volume has been kind of dismal, anything to trumpet, anything to beat their chest on is something that they will do so with. Also, year to date, ADV is down 4% from last year, with about 16.2, almost 16.3 million contracts so far here in 2015. You want to parse it a little further. Equity options volume in July, 340.1 million contracts, 6% increase from July of last year. Index options volume was up 18%. So that's a big month. It's not surprising given the big macro developments and moves we saw in July, with a little over 39 million contract. So there you go, a little spark of life in the options market. July helping to stem the year to date slump we're into, which was last month down about 6% from 2014. Now so far we're down to about 4%. So we'll see if we can have a few more rocking and rolling months. Perhaps we can even end the year flat, or who knows, even a little bit up on the year. We'll see. But maybe October will have to be the deciding month. But so far, at least, still overall year a little bit light from an options perspective. But July, not so bad as it turned out. And now, without further ado, we'll keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Welcome back to the Odd Block. This is indeed the portion of the program where we break down what's catching our eye from some of the weirder side of the options market, some of the paper that makes us scratch our chins and say, And we're going to kick things off today with a name we haven't talked about in a while. This is Williams Companies, Inc., ticker symbol WMB. Closing today, $51.65, down about 83 cents, or about 1.5% or so on the day. So the name that does some decent volume, certainly from an odd block perspective, with so many of our names doing 300 to 500 contracts a day. This one averaging about 35,000 contracts a day. So very robust volume, doing just a tick under 100,000 today. So the volume out there clearly lighting it up, about 3x out here in good old Williams. And what caught our eye out here today is not some of the stuff we've been talking about of late, which is very, very close to home, daily options in some cases. No, a little bit farther afield this time. We're going all the way out to Jan. In particular, what caught our eye out here were the Jan 2016 60 calls. When we started talking about these on the site this afternoon, paper, they were going up 5,200 and 50 times for $1.75. That's on open interest of a whopping 64,500 contracts. That's pretty much the lion's share. We didn't see really any other size going up today. That was pretty much the total of the volume. They went up in one block on the ISE. We did see just a hair shy 150,000 contracts going up for 52.22 as well, which would pretty much be a delta neutral ratio near the time. So could be paper selling and putting on some stock to get some edge out there. Edge. That's a dated term to say the least. Get some income out there, or perhaps given the size of the open interest out there, could be a bit of an unwind as well. Mr. Rock Lobster, kick us off. Where do you fall on this one? Someone coming out there to get the quote unquote edge, or I think they're taking it off?
The edge. What edge is there? Citadel has soaked it all up.
Yeah, they took that big piece of bread in the sauce and just dunked it all up, and there went the edge.
Well, Ken Griffith has to buy his. He's got to buy a new saison every couple years.
So this particular trade, I think it's potentially could be an unwind because there's high open interest. But when it comes off when it goes up sort of delta neutrally, you normally don't put. When you unwind, I would think you would, usually if there was some gamma associated with the trade, how it would be put on. So, like I said, when it's a delta neutral type trade, I feel like they're putting it up opening, and they just are kind of doing more of the same on this one. I know Williams Brothers or Williams Companies there's a lot going on with risk arb in that one. And this could be kind of part of that deal. I mean, it was just trading $61 not very long ago when they were doing I believe they're kind of like Kinder Morgan when they were sort of buying back their pieces or something like that. There's some corporate action going on that's driving some pricing, and it's way, way off from that level. So I feel like this is somebody, that is kind of the upper bound, and they're sort of writing the calls on that upper bound and trying to be long stock. So kind of a yield play in how I feel like it is as priced.
And if you're wondering where all that size went up out there today, it actually wasn't on that strike we were talking about there. That was only about 5,000 of the nearly 100,000 contracts. Like 50,000 of the OC 57 half calls went up today against, looks like maybe about 23,000 of the no 49. So maybe a bit of a rollback or an adjust or a backing up, a weird spread you don't see very often. About 26,000 open on the no 49s and really not much appreciably open on the OX. So a bit of a weird spread there, and that pretty much accounted for the lion's share of that 100,000 contracts going up today. Again, like Andrew was saying, a big merger arb name and a lot of paper lighting it up out there today. And Williams Companies, we just touched on a little piece of it, a lot more for you guys to dig into if you are so inclined in Williams. Meanwhile, we're going to keep on rolling into our next name. This is NorthStar Asset Management Group, ticker symbol NSAM, closing today right around 18.5 or so, up about a quarter on the day. This is the name that does about 1,800 contracts a day, doing about 10.5 today. So another decent volume day out here, this time in NorthStar. Certainly not 100,000 contracts, but comparatively a pretty decent day. And what caught our eye out here was the old 1x2, in particular, a lot closer to home this time, not Jan, but AUG. The AUG 17.5, 20, 1x2 ratio, call it what you will, going up when we first started profiling it, 2,500 by 5,000 times for $1.15 and 20 cents. Paper buying one, selling two, so knocking off about 40 cents off that call, getting the whole thing for about 75 cents or so. As the day went on, a total of 2,800, nearly 2,900 by about 5,000, so a few more going in on the calls, on the 17 half calls, I should say, versus the 20s. Not much open interest to speak of on the 17 halves, but about 2,500 open on the 20s. So our friend here could be perhaps even closing and then reopening on a different direction on that same strike. Not likely, but you never know out there. We've seen weirder things cooking. This one went up in 2 blocks on the old Philly. No real, didn't see any stock going up with this one. And it looks like our old favorite version of the 1x2 of Mr. Rock Lobster, where people are coming in to buy one and sell 2 and maybe get themselves in a whole mess of trouble.
They're doing this through the earnings, and one of the things I've learned from when I was younger is like, why sell an option for 15 cents or a dime? I'm sure it's going to save them a couple of cents, but why do you sell the 20s against the 17 and a halves? And the 17 and a halves are kind of trading for parity. I don't know if it gives you any real cover. It just, like I said, it's an odd one because that didn't make any sense to me selling the little tiny kind on top. Didn't get it.
But
Don't understand.
They sold them twice, so they therefore made 40 cents. So therefore, it's a great sale. You're missing the logic, sir.
Oh, they made 20 on 2.
Yes. Yeah, exactly. Exactly. Why wouldn't you sell that for 40 cents all day long?
It's a head scratcher for me. The company is kind of interesting as far as, it's a little kind of a sleepy, one of these type of sleepy ones there, but it's bouncing around a little bit. But highs a year in the 20s. You're paying $1.10 for the 17 and a half. So, they're kind of already close to parity anyway. So, it's a little earnings play. I do not get that sale, but hey, they're already 15 bid coming out. So, what are you gonna do?
There you go. He's printing money. 40 cents, sir. You're just seeing it the wrong way. And now, then, once you look at it that way, how could you not sell those 20s? All right.
20-cent guy.
What's the worst that could happen, sir? What's the worst? What's the worst that could happen? It goes to 27. So what? You sold it for 40 cents. Let's move on to our final name, our final victim. Call them what you will here on the old odd block portion of the program. This is Merck and Company, going back to the drug healthcare sector. This is, of course, ticker symbol MRK. Closing today, $59 and some change, pretty much unched on the day. So it wasn't an underlying extravaganza that caught our eye, but some decent options paper going up out there today. This one averages about 16,000 contracts a day, doing about 26.5 today. So another decent day from an overall volume perspective. And once again, because my scrolling hand wasn't worn out enough, we're going to go all the way back out from August and the nearly daily paper back out to Jan of 2016, where what caught our eye out there this afternoon on the old mothership, theoptionsinsider.com, were the Jan 60-65 call spreads going up 6,400 times for $1.35 on the spread, and then follow that all up. That wasn't enough for you with the Jan double puts, 55 puts, also going up for about $1.50. This looks like the old risk reversal, pretty tight though, for buying the call spread with the 60 calls, paying through the offer, so they really wanted to get that done, and then selling the puts on the bid. So didn't really get the best fills, but again, they're doing a decent size, so sometimes that's about to be expected. So again, looks like the old standard financing that 60 long position with whatever you can get. In this case, it was a 65 calls and the 55 puts. Looking at the open interest on this strikes, there's some size on all of these, so it is potentially our friend perhaps unwinding a bit here. The doubles have 17,000 open, the 60s have 20,000 open, and the 65s have 17,000, almost 18,000 open as well. So size open on the strikes, actually size open on a lot of strikes out here in Jan and Merck, so a lot of longer-term players out here in Jan. Mr. Rock Lobster, take us home. What's your take on our friend legging into this risk reversal, close and opening, and what's your take on this pretty tight bullish risk reversal out here in Merck?
I think the biggest thing was where Merck is. So unless they put it on in January of this year, because they're buying the call spreads and selling put, right? So you think of it, if they're buying, this trade is buy call spread, sell put. The other side would have to be a collar, right, where they sold the call spread and bought put. And unless they kind of hit the highs in January, it would be a crappy place to close this whole thing. The only reason why you might close it if you think Merck is going to rip. So either way, they could be just adding more of the same because it recently kind of dipped down pretty hard, or they're closing something they put on a while ago at higher prices. But they would have had to nick the top, pretty basically fantastically in order to want to close this at this point, I think. So it's feeling a little open-esque, and implied volatility is 15.
There you go. That's about gold level of vol there.
It is as cheap as, it's not like any, well, what's Merck going to do? It doesn't have that growth, but it is pretty cheap. Yeah, lows of the year.
I'm looking at this chart here of Merck, and you're right. Certainly since the last 6 months, it kind of has been doing a whole heck of a lot of nothing. It's been vacillating a bit. It hits down to about the doubles, back up to about the 61, and back down again. Rinse and repeat. Maybe our friend here is just washing his hands of his. I can't take it anymore. It's just not. It's not doing a heck of a lot of anything except saying range bound. And so I'm gonna unwind and be done with it. My collar wasn't perhaps the best time to collar Merck. So he could indeed be unwinding. You're right. It is a bit of an odd time to close, but you can't ever account for human frustration at the end of the day. All right, that's going to do it for Merck. It's also going to do it for the odd block for today, but fear not, we got a lot more coming your way, and because it's Monday, it's time once again for some strategery, as it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome back to the Strategy Block. You guys know the drill by now. This is the portion of the show where Uncle Mike, he of St. Charles fame, puts on the old smoking jacket and grabs the bubble pipe and the stone tablets and prepares, I should say, to dispense some options, wit, and or wisdom. Uncle Mike, before you start, let me just remind you that I did finally, after much delay, see the old Minion movie. So if you have any questions, feel free, sir.
Got it. I have to say I was kind of disappointed in the Minion movie. Without the evil dude, I didn't think he would. They're like they need each other to make it work, I think.
I kind of had the same feeling. I kind of walked away a little bit less than enthused. It just didn't really grab me. It was kind of like I think they would have been better off. This is our Minion review second here. They probably would have been better off doing maybe a feature-length bunch of those little mini Minion movies, if you've seen those, because those are silly and they can only sustain themselves like 10 minutes and you do the next thing. And that could have been a bunch of shorts. That probably would have been better than what they ended up doing, which was this kind of long, meandering kind of bit of nonsense.
Yeah, and the evil dude who has turned good in the sequel, I thought that the two of them need each other. I think that the Minion shorts would have been a good idea, yes, but I wish maybe they would have made something with like the evil dude as a kid or something like that.
That's what I thought it was going to be about. I thought it was going to be about how they kind of got together, and it was in the last 8 seconds. But other than that, there's really no Gru to be spoken of, seen throughout the movie.
Yeah, so I have to say I loved the Minions throughout the other movies, but I guess you need to have the right team in place, and this is one where they just didn't have it, I don't think.
Yeah, disappointing stuff. So if you're waiting for us for our definitive review on the Minions, if your kids will probably want to see it anyway, but go on a matinee, save yourself some money.
I would agree with that. Yeah, it's good, but it's not. It didn't live up to the hype. I would say that.
I could tell by your tone when you initially mentioned it a few weeks ago that it hadn't warmed the old Tosaw cockles.
No, it had not. It had not. But I'd recommend seeing it for those of you that have not. But it was definitely not what I was hoping for. But anyway, on to the strategy block. Let's talk some strategery here. Today, I want to focus on patience and the importance of patience when trading, when investing, when doing anything. Don't just do something just for the sake of doing something. Doing stuff is very important, as my co-host Andrew will agree. However, doing something just for the sake of doing something is not a good thing to do. I want to tell you a story from the book Remnants of a Stock Operator. It's a phenomenal book. It's a book kind of about the story of Jesse Livermore's life. They changed the names around, but nonetheless, Remnants of a Stock Operator. It's a phenomenal book about a stock trader over almost 100 years ago. And one of his rules was that whenever a stock goes to 100 for the first time, it typically goes to 110. Now, whether that rule holds true today, I'll let our audience decide. But that was one of his biggest rules with which he had. And so this is after, I forget if it was his second or his third bankruptcy. But keep in mind, Jesse Livermore was one of the wealthiest men in the world at the time. But he paid the price for it and did go bankrupt a few times. But kudos to him. He still paid back all of his creditors, even after he went bankrupt typically, and he didn't have to. But I forget which bankruptcy it was. But nonetheless, he finally got someone gave him a little bit of money to trade with. And he had a limited amount of trading money, and he also had a limited amount of trades with which he could make. So he knew that the trade that he was going to make had to be just a AAA trade that was going to be good. And he was looking at a specific stock, and he really felt that stock was going to go from 40 to 300 or something along those lines. I forget what the exact numbers were, but the stock goes from 40 to 50. He wanted to buy it, but he stayed on the sidelines. Stock goes from 50 to 60. He keeps thinking about how if he's undisciplined, that's how he became bankrupt, so he didn't want to break his trading rules. Stock goes from 60 to 70. Very tempting for him still, as he was playing this as a breakout trader, but he still had to wait and be patient, because if the stock didn't give him what he wanted, then he could not do it. Stock then goes from all the way up to 100, and then at that stage, he buys the stock. Sure enough, within a couple days, the stock's up at 110, and he had bet almost everything that he had on that one specific trade just to follow his rules and get it so that he could pay off some of his creditors and get back in the game as a trader. Well, he was right. The stock went up, and he followed his rules, and he rode that stock up even further. And within just about a month from the time that he had made that trade, he was almost all the way back to where he was before. And the lesson on this isn't to want to go bankrupt by any means and come back from it several times and then eventually, I believe, even committed suicide like Jesse Livermore did. But the lesson is on keeping patience no matter what. Sure, he felt that he had the ability to buy that stock at a lower price, but he wanted to hold tight to his trading rules. Right now, what I'm doing in my trading is that for my long calls on SPY, I'm waiting until we hit new all-time highs again. Got out of the long call several weeks ago, but until we hit a new all-time high again, which would be the 213.78 level in SPY, I'm not going to buy any long calls. I might throw on a put spread here and there, but I am not going to buy any long calls in that specific strategy until we actually make what we need, until what we need to have happen happens. And if I start going out and breaking trading rules, then I'm just trading from my gut, and that's something that typically doesn't end up too well. It might work okay at first, but by breaking your trading rules, then you're creating chaos. And when you have chaos, it just leads to more chaos, and more chaos typically leads to a zero balance in your account. So with that in mind for today, I want to emphasize patience, and don't do stuff just for the sake of doing stuff. Follow your rules.
Well said, sir. We should caution, though, don't follow all the rules of Jesse Livermore, because he did indeed kill himself. So perhaps some of those rules coming back to haunt him in the end. So follow them up all the way till the end, and you can kind of maybe avoid those latter ones, because not exactly the best example. But good stuff. Well said. And look forward to more movie reviews from myself and Uncle Mike forthwith. But meanwhile, we're going to keep on rolling. We got a few more minutes here on this Monday edition of the Option Block. So without further ado, we'll give you guys some time to squeeze here on the old All-Star panel and dive on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, welcome to the mail block. This is indeed the portion of the program where you guys get to take a seat on the old ASP. No shortage of ways for you guys to do just that. Shoot us an email, questions@theoptionsinsider.com. Visit us on the website and use the contact form, or post a comment on the site, or of course, find us on social media, twitter.com/options, facebook.com/the options insider. Over there on StockTwits, we're just Options Insider. So again, no shortage of outlets or ways for you guys to reach out to us, make your questions or comments known. First up, Andrew, this one's for you, actually. This is some feedback from something we were chatting about on the live show last week. This comes from Beecher 454. I think this name sounds familiar. It sounds like I think they've written in before. They write, "Hey, for Longo's Odd Block." So that would indeed that's right. I remember this guy now because he called the show the Odd Block before. So yes, he has written in before. And then just for future reference, the Odd Block is a segment on the program known as the Option Block. There we go. We'll clarify that for everybody. He goes on to ask, "Hey, last week Mark S said the free options training is okay, but you need paid training to really make money. Can you give an example of how paid training is better?" And since Mr. Andrew Mark is not here, and this is right up your alley, I will give you an example or a way to first crack at this. Let me just say, by the way, probably the best example, maybe the one we just mentioned at the top of the show, your friend there who is now a market maker. I can't really think of any free outlets that are going to spawn a market maker.
No, none.
Whether that's a good or bad thing, I'll leave that up to your own judgment, listeners. But they have done it.
It depends on the kind of paid training. Basically, what we do at Option Pit is we've tailored our floor trader training course for retail, which means you kind of use the Greeks, you understand risk management, you understand position management, which, unless you learn it the hard way, it is something that you can learn. And just learning how to manage a position in a book of options, right, can save you a lot of money. A lot of our clients, and what we call our shop sometimes is the shop of last resort, meaning, they've tried a bunch of people or they've tried a bunch of ideas, and it doesn't work. And the reason why is most of the time it's just like failure of risk management, failure of position management, because they just try one thing and that one thing can work, then all of a sudden it doesn't. Like, why doesn't it work? So, what we do is paid training really teaches you how things work, because the people that are teaching you have learned the hard way already. And if they have not learned the hard way, then they probably aren't worth taking a class from. So that would be the one thing I would say. A lot of it is education and learning how to position properly. And that's what we do. So again, it depends on the type of paid training, but there is a lot to the education, and free education does not go into that detail because of compliance reasons, the exchanges, the platforms. They're not going to go into the sort of detail. They're going to say, here's the platform, here's how it works, you go figure it out. But they're not really giving you the nuts and bolts of how the positions and things are going to move over time. It's just, they don't do it. So that's the reason why, the free education only goes so far. Right? They just give you some basics, and that was it.
A lot of times they're not allowed. We work with a lot of those partners. They're not even allowed to mention specific names. That's why we talk about XYZ a lot, because
exactly.
A lot of our partners can't even mention specific names. So yeah, there's a lot of issues sometimes. Well, not that free stuff is bad. Certainly, if you're getting started, that's a great place to start. But once you're diving in, you decide you want to become a market maker on the floor of the P Coast, then perhaps you need a little bit more assistance. Uncle Mike, anything to add here, sir?
Quite a bit, actually. In my former life, I was the director of education at Options Express. And you're absolutely right, Andrew. You're not able to be very specific in some of the things with which you do because of compliance reasons, and rightfully so. I remember the presentations with which I would do would be, this is what a condor is, this is what a covered call is, and that type of thing. In terms of getting specific in strategy, we really couldn't do that because of the fact that it couldn't be conceived as a recommendation, and rightfully so, because Options Express was a self-directed firm. I was very fortunate in my past life at Options Express in that I worked for some of the best people in the history of the business, in my opinion. Joe Cusick was my direct boss. Right now he's over at Moneyblock, and Ned Bennett was also a big part in kind of the culture there. And one thing that we also did is we would partner with various education partners. This is before the Option Pit was around, but we'd partner with Optionetics, with Wise Trade, with you name it. If they were out there at the time, we did some type of a joint event with them. And so whenever I would go back to either Ned or Joe and say, well, some of the things they're saying really aren't that good right now, they were always adamant saying, well, you correct them on the spot. You make sure that you tell them the right things and that they're not necessarily going to retire after 2 days. And I want to just tell you one story. I was at one show, and some of the joint events with which we would do, the way with which it would work is that we would do a site tour showing, and all these strategies that this company teaches, you can do at Options Express. Come open up an account with us. And that was the basic gist of my job. I mean, there's a lot more to it than that, but that was the basic gist of it. And at one specific show, I just saw this out of the corner of my eye. This one lady was very stressed out talking to a salesman at this specific company saying, I've spent over 30 grand on your programs. I have thousands of dollars of debt. I'm barely hanging on. I don't know if I'm going to pay my mortgage. I don't know how I'm going to pay my rent the next month. And how can I afford to buy this final class that you're trying to sell me? And the guy's come back, and keep in mind, she had also said that she had been doing stuff with this company for years. And this guy's comeback was saying, well, that's all the more reason why you need to buy this class. And he was dead serious about it. So you see some of the ugly sides of the education world like that. But I've been on this show with Andrew and Mark for a long time. And so long as you can handle all the dirty jokes and swear words by Sebastian, they're a pretty good group of guys. So overall, there is good and bad in terms of both the free education world as well as the paid education world. And I'm very thankful that I get to be co-host on the show with a group like Andrew and Mark.
Well said, sir. Yeah, there's a reason why we have these guys on. We know at the very least, at the end of the day, they're not going to rip you off, which is saying a lot for if you know anything about the paid educational world.
Yes, it is.
That's saying quite a bit. That's what we look for first and foremost. Will they rip somebody off? And then secondly, all the other things Andrew mentioned. And certainly it doesn't hurt to have a market-making background. Like we've said many times, that still is the best way to learn the business. It's the hardest way to learn the business. It's also one of the ways that's vanishing pretty much unless you create market makers is vanishing completely. So it's kind of hard to replicate that unless you go out and find guys who have done it. So that's why we like to work with them. Not to turn this into an option pick commercial. You guys can go out and choose whomever you like. We just happen to work with these guys. All right, there you go. That's it for the mail block / option pit plug block for this week. And now we're going to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the program where we tell you what we're keeping an eye on for the rest of this week into the old weekend. And we do have some interesting, we talked earlier about earnings. We do still have some interesting earnings on the horizon. Of course, we are recording this on Monday, so on Tuesday, by the time you're listening to this, we'll have CVS. Good old Disney, an interesting one to watch. Someone just wrote in the other day with questions about big summer blockbuster movies and big names like that. So if you're interested in that sort of thing, or just all the other different conglomerate arms and tentacles they have moving and shaking, then Disney is an interesting one to watch. Of course, the mother of all hype-heavy names, Tesla coming in on Wednesday. We also have Office Depot on Tuesday, and that's pretty much it for the big names for the week. So earnings still very much a factor, in addition to all the fun macro things we've been talking about before, including all the tumult cooking over there in the commodities set. And I should mention, too, looking ahead a little bit, people we were talking on our live show, when won't they list options on the weekly VIX futures? We kind of implied on some recent shows that there's a lot going on behind the scenes that are problematic for listing those options. Well, it seems like they may have finally worked through those, but it's still going to be some time. If you're waiting to trade weekly VIX options, it's going to be not till October 8th. So you got some time ahead of you, but at least we do have a clear date on the horizon. All right, VIX weekly futures aside, Mr. Rock Lobster, what else are you keeping an eye on for the rest of this week, sir?
We have non-farm payrolls. We'll see how that affects volatility and yields. I think those are still, they still matter. The Fed has pulled out, so a lot of this stuff has been less. You don't see the pop and vol that we used to get on these non-farm numbers. I mean, VIX is running in at 12.5. Last year, we would see, VIX would be running 3-4 handles higher than that into the non-farm payroll numbers. So we're getting back to kind of the good old boring days as far as not caring what the Fed does, as the Fed just slowly kind of gets itself out of the way of the economy. But it's still, I think the commodities are a story as far as how low can prices go on all these things. And you remember the contract that we love those contracts that we love to hate, like the USO. I think it quietly kind of made a low today. Sort of quietly under the radar, made a low. So I look at stuff like that and I'm like, well, whatever bloodshed is going on is not quite over yet. And it made a low handily, I might add. So, last year at this time, it was trading $35, and now it is trading $15. That's all I'm going to say there.
Predictably garbage, perhaps. Not perhaps quite as predictable as a VXX, but still at least very, very heavily in the garbage category. Mr. Uncle Mike, take us home, sir. What do you keep an eye on for the rest of this week?
I've said it before on this show, and I'll say it again. Buy the dump, sell the hump, don't diddle in the middle. Right now, if you're bullish, I'd highly recommend that you proceed with caution until we can actually confirm and we make new all-time highs in the S&P. And if you're bearish, I would wait until we at least make lows, or until at least the market goes negative on the year. Once again, make sure that you understand what you're doing and that you are doing this based upon the financial plan that makes the most sense for you. But in terms of the raw sheer numbers, that is what I am looking at right now.
All right. Thank you for that, Uncle Mike. And that is going to do it for the Around the Block segment. It's also going to do it for this episode of the old Option Block. But before we go, as always, we already did the Option Pit plug block. Surf on over to optionpit.com to learn more if you haven't done that already. And Uncle Mike, take us home, sir. What's cooking? What's coming down the pike in the land of RCM?
Well, if you are a self-directed trader and you are looking for a place to trade, if you want to come under the RCM umbrella at either TD Ameritrade and or Interactive Brokers, feel free to give me a call and I can tell you what that would entail. We do have commission rates that sometimes can be more favorable to you. In a lot of cases, it can be 35 cents a contract or 25 cents a contract plus a small exchange fee. No ticket charge. No, don't get me wrong. I'm just telling you the hype of it. There is a little more to it than that. But nonetheless, feel free to give me a call. I'm more than happy to talk with you about that. Also, we can offer advice on trades depending on how you're set up and what you're looking to do. Feel free to give me a call anytime at 312-212-3531 or send me an email at mtosaw@rcmfs.com.
All right, and that's going to do it for the old show. On behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course for sending in such great questions. Keep them coming, and we'll see you next time right here on the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.